Your Excellency, President Rinkēvičs, Honorable Vice President of the European Commission, Dombrovskis, Excellencies, ladies and gentlemen, dear guests, warm welcome to the conference that we celebrate the 10 years with Euro. I will start with a short quote from Mario Draghi from his famous speech in 2012, which became famous with a sentence, "Whatever it takes," and that we refer to as saving Euro. But also in the same speech, he said that Euro is irreversible. And I do believe that those 10 years that we have been living with Euro, since the introduction of Euro, we have seen that it has become an unchangeable part of our lives. But of course, behind the introduction of the Euro, it was preceded by a lot of effort, by a lot of work, by a lot of people. And I would like to acknowledge the work done before the introduction of the Euro. And I'm glad to see that many of the people that worked on it are here with us in the hall today. This year, we celebrate 10 years with Euro, but we also mark the 25th anniversary of the birth of Euro, and we also will celebrate later on the 20 years since Latvia and 9 other countries became members of the European Union. Today's conference, we will aim to look at the past, at the present, but especially at the future of Euro in those turbulent times. And I do believe that with the insight of so many esteemed speakers, you will have a lot of different ideas that will further on help to shape the future of the Euro. And without further ado, I would like to invite to the stage the President of Latvia, Edgars Rinkēvičs, for the opening address. President kungs, vārds jums.
Honorable Mr. Kazaks, Honorable Mr. Dombrovskis, President Bergs, President Vējonis, President Levitt, ladies and gentlemen, excellencies, this year is a year during which we have many celebrations and during which we reflect, because 20 years ago, Latvia acceded to the EU and NATO, and 10 years ago, we introduced Euro. I have to say that these very targeted decisions that resulted from the efforts of many politicians, officials, and diplomats, many generations of these officials, they have contributed to our security and trustworthiness with our partners and investors. Reflecting on this time, I have to say that joining the Euro area was a very complicated and tense process. Before introduction of Euro, only approximately half of the Latvian inhabitants supported this idea, and at the very beginning of this process, it was just 30%. In Eurobarometer survey, at that time, 43% supported, but currently, the overwhelming majority supports our participation in the Euro area. I remember this time very well. We had a lot of heated discussion, a lot of rational discussion. Some thought that Euro would bring economic stability, predictability, and closer integration, development, whilst others didn't want to give up the monetary independence that recently regained national, stable, and beautiful local currency, Lats. But now in 2024, Euro has become an integral part of our daily lives and our economy. Introduction of Euro was not a goal in itself. It was a tool for us to be able to use the advantages of the European single market. It contributed to our competitiveness and facilitated the mobility of people and companies in the European Union. It also strengthened our link with the European Union. I would like to use this opportunity to say huge thank you to those who made sure that euro is introduced in Latvia. And I would also like to say thank you to those who do everything at the moment for the euro to be a strong and a trustworthy currency. And I also wish this currency to work for the benefit of our people.
Turn to English. Throughout the years, there have been many events that questioned the viability of the euro. But the euro has constantly proven its worth. Latvia has a remarkable story to tell about the euro's adaptation. In 2014, we became the 80th member of the eurozone. By that time, Latvia had established itself as a trusted member of the European Union and NATO. Consistent decisions to pursue closer ties to the West is our safeties and securities guarantee today. We also view this as the cornerstone for Ukraine's fight against aggression. Latvia introduced the euro only 4 years after the global financial crisis. Since then, it has continued to make significant progress. For Latvia, euro proved to be a powerful tool for our economic stability and integration in the European Union. It has also provided a sense of security and confidence for businesses and society. After introduction of euro, Latvia has gone through several storms. COVID pandemic presented a great challenge for our companies and the society. The government support package helped to mitigate the economic fallout. Coming out of the pandemic, Latvia's economy was one of the least hit in the European Union. It differs from the financial crisis before the euro, when Latvia saw its economy shrink the most. Russia's war against Ukraine has further tested Latvia's resilience. We have been heavily reliant on imports of energy and raw materials from Russia. The war caused the rapid rise of the inflation. Only within a year, majority of Latvian companies were able to restructure their supply routes and find new partners. Most of them are in Europe. Without the euro, it could not have happened that fast. The resilience of our economy shows that Latvia is better off with the euro than we would have been without it. Latvia continues to enjoy a better credit rating and lower government borrowing costs compared to non-euro Eastern and Central European countries. When Latvia was joining the eurozone, Herman Van Rompuy, the former president of the European Council, said, "The eurozone is again a club with a key, not at the exit, but at the entrance." Now we are in the club. And there is a line again. Bulgaria is already at the gates. And I wish them a successful introduction of the euro. Romania and the Czech Republic are lining up. It will not be easy to join. It was not easy for us either. The euro gatekeeper is quite strict. It ensures that the dress code perfectly fits economic convergence criteria. But once you are in, you are with the best. The membership alone does not guarantee success. It takes continuous effort to maintain the relevance and standing among other popular clubs. As a member of the club, we have to make the best out of it. It depends on us. It's up to us to decide whether we will spend the entire party just sitting in the corner, or we seize the opportunity to connect with the new people, cultivate meaningful friendships, and generate innovative ideas. The list of do's and don'ts for Latvian economy is well known. We have to invest in human capital, connectivity, sustainability, and innovation. We need to streamline our administrative processes to increase efficiency. But I'm absolutely confident that we have the potential and the right conditions. Now, it is the time to make decisions and act. I thank you very much for your attention, and I wish you a very successful conference as far.
Paldies, Valsts Prezident.
Thank you, the President of Latvia.
He has led Latvia through challenging times of economic and financial crisis, implementing difficult reforms and fostering Latvia's growth and recovery. His determination and efforts paid off when Latvia joined Eurozone. With Latvia in his heart, he's shaping economic and trade policies of the European Union and globally. And last but not least, I have to highlight the relentless dedication in supporting Ukraine. Please welcome to the stage the Executive Vice President Valdis Dombrovskis.
Labrīt, Rīgā.
Good morning in Riga. I am very glad to be here in Blackhead's house after 5 years to celebrate 10-year anniversary of Euro in Latvia. And I am very glad to see many of the team of that time with whom we worked together for implementation of Euro. And one of them is indeed the President of Latvia, Edgars Rinkēvičs. We were thinking or wanted to mention people who worked at introduction of Euro, but that would take very much time. That's why I will not name you all and notify your endeavors for introduction of Euro, because we know that very well, each and every one of ourselves.
Excellencies, governors, ministers, ladies and gentlemen, a very warm welcome to this conference co-organized by the European Commission and Bank of Latvia. For me, it's a pleasure to return to my home city for this momentous occasion. Not only we celebrate 10 years of Euro in Latvia, it also coincides with 20 years of Latvia's membership of the European Union coming up this May. Many people who worked to bring about both achievements are here today. All of us wanted to see Latvia to take its place at the core of the European Union. At the beginning of 2019, it was at this very venue when I came to talk about Latvia's 5-year experience for the Euro, the magnificent house of the Blackheads in the heart of the Riga Old Town. For a quarter of the century, Euro has been making life easier for Europeans. Today, it is the second most widely used currency in the world. For such a young currency, it's an impressive feat in a relatively short space of time. I remember very well the early 2002, when Euro banknotes and coins appeared for the first time in 11 EU countries with combined population of 308 million. It was the largest cash changeover in history. Not yet in Latvia, of course. When Latvia was discussing the idea of joining the Euro, we were just emerging from the global financial and economical crisis. Back then, there were many skeptics. Some of them claimed that Latvia was buying the last ticket to the Titanic. However, our determination to join the Euro provided a solid policy anchor at the time of great economic stress for the country. Latvia has entered the crisis as one of the most overheated economies in the world, with lax fiscal policy and unrestrained bank lending. Preparing for the Euro entry also helped us to set out a major reform agenda, which was badly needed. On the economic side, since 2014, we have found the Euro to be a stabilizing force that also helped Latvia's competitiveness. It has provided a significant incentive for economic development. I don't want to overburden you with figures, but they do tell their own story. According to Eurostat, between 2013 and 2022, Latvia's GDP per capita rose by 10 percentage points to to around 73% of EU average. Or take labor productivity, which has increased by 12 percentage points to 75% of EU average. Since the euro was introduced, a clear majority of Latvians believes that having the euro is a good thing for their country and good for Europe as well. Some benefits are very tangible. Latvians can compare prices easily when they travel and shop abroad. They see the euro as making it easier to do business in other countries, removing currency risks and conversion costs. More widely, Europe's common currency has improved countries' business environments and made them more attractive for investors. This is certainly the case in Latvia. Why? Because using the euro remains uncertainty about countries' future monetary policy. It strengthens external credit ratings. It reduces public and private funding costs. In turn, all this helps to promote growth, helps to promote foreign and domestic investment, leading to higher economic growth and more jobs. Euro membership also brings a range of benefits that may be less obvious. For example, it subjects a country to specific EU laws in areas such as banking and fiscal policies. Stronger fiscal policy coordination in the euro area helps to ensure sound fiscal policies and the formation of buffers to deal with future shocks. And it comes with a massive firewall, the European Stability Mechanism, that can provide financial support in case things go wrong. This promotes financial stability and fiscal discipline in countries concerned. It is good for the EU as a whole and boosts our collective competitiveness. Ladies and gentlemen, for the Baltic states, and I hope that my Estonian and Lithuanian colleagues would agree, adopting the euro was a watershed moment. It was not just about raising economic efficiency and promoting trade and investment. We also had a strong political motivation to be more closely integrated in the core of the European Union and the democratic world. For Latvia, it sealed our full membership of the European family, tying us into its values, rights and freedoms. Solidarity and partnership, human rights, justice and the rule of law, to name a few. It gave us a true feeling of acceptance and belonging in Europe. I say that because since its launch, the euro has become far more than a currency and a means of exchange. It is a symbol of Europe's strengths, unity and solidarity, the cornerstones of enduring European peace. That peace is now threatened by Russia's brutal aggression against Ukraine. In itself, it represents an attack on European values. With the hindsight of history, it is clear that we were right to think as we did after regaining independence to work towards joining the EU and NATO as a matter of urgency. Given the Baltics region's precarious location on Russia's borders, our shared recent history and familiarity with our large neighbor, we also saw euro as a part of protective barrier and vital for keeping our currency and economy stable. I particularly remember the high level of support in Lithuania for euro adoption. It took place not so long after Russia's illegal annexation of Crimea in the first quarter of 2014, and this has helped focus people's minds. Today's tense geopolitical situation makes it more important to be properly anchored in a camp where we belong, in a free and democratic world. It is also important as a way to preserve stability and to protect ourselves against risk for speculative attacks. This is especially true for small open economies that are geopolitically more exposed, such as the Baltic states. Belonging to the euro makes us feel a good deal safer. It has helped us to survive a series of shocks and to stay strong in an increasingly volatile, hostile and fragmented world. On the economic side, without the euro, the impact of the pandemic and now Russia's full-scale war against Ukraine would have hit us much harder. Euro area membership brings greater credibility. In turn, that leads to lower borrowing costs and greater economic stability. We can illustrate this by looking at the interest rates. Throughout the pandemic, 3 months interest rates in the euro area remained relatively low to compare with those of non-euro area countries such as Hungary and Poland. But the difference between widened significantly after February 2022, when Russia launched its military offensive against Ukraine. Interest rates in non-euro countries rose more sharply than in the euro area. Over the past few years, interest rates have turned back from the previous extreme lows to address high inflation rates. And the ECB's policy is proving successful. Inflation is declining across the euro area, also in Latvia, where the shock has been particularly significant given the country's high exposure to soaring energy prices. The coordination between monetary and fiscal policy has allowed us to lower inflation without creating a large economic downturn. In this context, the euro area economy has showed remarkable resilience, not least thanks to the good policy mix. However, we cannot say this so clearly for some member states outside the euro area. Here, the economic risks are higher and long-term interest rates are substantially above those within the euro area. This has significant implications for companies regarding their investment decisions and future growth potential. Ladies and gentlemen, when the euro was born in the aftermath of the Cold War, the world was a relatively calm and stable place. Not so much now. Today's world is characterized by great polar rivalry. Patterns of influence are shifting between regions as well as continents. Across the world, we see rising protectionism and unilateralism. In such turbulent and changing times, the EU can achieve much more when its member states act together and stay united to protect one another. The euro is a key element that underpins European unity and strength. We see it reflected in a strong public support for a single currency from Helsinki to Lisbon, from Athens to Dublin. The Eurobarometer survey carried out in October, nearly 8 out of 10 respondents in the euro area said they thought having the euro is a good thing for the EU. Together, the 20 countries of the euro area command significant influence by pooling their economic strengths. This not only mitigates the risks faced by individual countries, it also acts as a safety net and anchor of credibility and stability. Since the euro is used extensively in global trade and financial markets, euro memberships limit the risks of sudden capital outflows if a crisis strikes. At times like these, banks operating in the euro area can draw on support from the European Central Bank. This means they can continue to lend to people and companies when it's needed. We saw this happening during the pandemic when times were especially tough. So, what of euro's future? The number of countries using the euro has now grown to 20, with Croatia the latest to introduce it at the start of 2023. Bulgaria is likely to be next country in line. It has been taking part in the exchange rate mechanism too since July 2020. It is working hard, both technically and politically, to meet the convergence criteria required to join the euro area. Bulgaria has made significant progress, and I hope that it will soon fulfill all the criteria so that it can become the 21st member of the euro area. Having more countries keen to line up in a preparation to adopt the euro is only a good thing. It confirms the euro's status as a successful, attractive, and resilient global currency. Also, expanding the euro area strengthens its wider role and influence. It promotes and boosts euro's role on the international stage. This can help us to protect multilateralism and rules-based economic order. In a fast-changing and more fragmented world, a strong role for the euro reduces our dependence on the decisions of other countries. It allows us to better defend the EU's interests and values internationally. Ladies and gentlemen, I already mentioned the difficult geopolitical landscape. Against this backdrop, and much continuing uncertainty, it will be essential to maintain the EU's global competitiveness. That means constant investment in innovation and technological leadership, achieving the green and digital transitions, and promoting our open strategic autonomy. Primarily, this means investment from the private sector. Let me start with the banking union, a flagship project for the euro area and essential part of the genuine economic and monetary union. We have been working hard to make sure that the EU's banking sector can continue to be a reliable and sustainable source of finance for the EU economy. After many years of work and reform, EU banks are now strong and in good shape. The sector has built up its resilience substantially. The EU system works well with strong rules that allow both the EU and national authorities to handle bank crises effectively. But we are not quite there yet. Despite all the progress made, there is still a lot of work that we need to do. We are missing an important element of the banking union, the European Deposit Insurance Scheme. So we need to keep working towards completing the project as we started all those years ago. However, as part of the EU's broader investment plan, we also need to unlock alternative sources of bank finance and lending, especially given the scale of investments that we need. This brings me to the Capital Markets Union. Deepening and further integrating Europe's capital markets is the most cost-effective step we can take to drive investment. Such markets give investors and firms more options and better saving opportunities for households. They unlock new sources of financing for companies, especially SMEs, making it easier for them to expand and thrive. A fully developed CMU would also further support EU-dominated financial markets and thus the euro itself. For all these reasons and more, completing the banking union and advancing with the capital markets union remains a priority for the EU. Doing so will help us build a conducive business climate that is attractive to investors and help us build global confidence in the euro. However, the euro also needs to keep up with the times and with the digital age. While we can be proud of what has been achieved so far, there is a need to adapt and innovate. As we move towards a true digital economy, a digital euro is a logical next step, given the declined use of cash in many parts of the world, including Europe. The digital euro would complement cash, but not replace it. And to be clear, the possible launch of a digital euro is a prerogative of the European Central Bank, which will have the final decision about if and when to introduce it. I'm sure our next speaker, Fabio Panetta, will have more to say on this important subject. To conclude, our common European currency started as a dream. It was an idea that was first mentioned in the 1940s by some forward-looking politicians who understood that a united Europe would need a strong single currency. Many years later, in the late 1980s, monetary union became a project to complement the closer economic and integration that was developing in Europe. This project, the Euro project, finally became a reality on 1st of January 1999, when 11 EU countries merged their national currencies and the euro was born. When I was a Prime Minister, I had to oversee a major adjustment program. Our country went through significant economic and social pain. But we came out stronger, and one lesson was clear: we had to join the euro. This was one of my key priorities at the time. I'm proud that Latvia, Estonia and Lithuania as well have become fully participating members of the euro family. It serves the Baltic region well, and we hope that we serve it well in return. As I have outlined, the euro has many benefits for people as well as businesses across Europe. It is a political and economical anchor in peaceful as well as in turbulent times, and it gives us a real sense of the European belonging. Today, a quarter century later, the euro is no longer a dream or a project. For most Europeans, it is a stable and essential part of our daily lives. Thank you.
Thank you very much to the Executive Vice President. And our next speaker is widely recognized across Europe as a driving force behind the digital euro, especially during his tenure as an executive board member at the European Central Bank. His vision and knowledge of monetary policies is highly valued, and we have a great opportunity to listen to him today. Let me welcome to the stage Mr. Fabio Panetta, the Governor of the Central Bank of Italy, please.
Your Excellency, President Rinkēvičs, Honorable Executive Vice President of the European Commission, Mr. Dombrovskis, dear Valdis, Ministers, Governors, distinguished guests, ladies and gentlemen, I am delighted to be here today. It is a great pleasure to talk about the euro on the 10th anniversary of Latvia's adoption of the single currency. Actually, there are many other good reasons to celebrate. The euro itself was launched 25 years ago, in January 1999, and at the end of that year, Latvia started the negotiations to join the European Union. These events are all part of a single coherent historical process driven by the integration project that Europe undertook in the post-war period. The Economic and Monetary Union, EMU, is one of the most ambitious elements of this project, and the euro is both a key achievement and a powerful symbol of success. Considering my role and background, you might expect me to talk about the euro purely from a monetary perspective. However, this is not what I'm going to do today. Finance is a means to serve society, and the euro is no exception. The single currency has objectives and implications that go far beyond the monetary sphere. Its fate shapes Europe's role in the global economic and financial landscape. Its function as an international reserve currency affects Europe's strategic autonomy and geopolitical position. From the perspective of 2024, the relevance of these issues can hardly be overstated. My remarks today will be organized around three broad themes. First, why do we care about the international role of the euro? Second, how this role, the international role of the euro, has evolved so far? And third, what can we do to strengthen it? So why do we care about the international role of the euro? Before February 2022, most people would have answered this question in purely economic terms. Issuing a global reserve currency brings clear benefits to an economy. These include higher seigniorage, a reduction in transaction and hedging costs, and what economists call exorbitant privilege. That is, as long as there is strong demand for safe assets, the issuer of a global reserve currency enjoys lower funding costs than its peers and earns a higher return on its net foreign asset position. The global status also creates risks that central banks should be aware of. During the global financial crisis, for instance, the exorbitant privilege actually turned into an exorbitant duty. The United States unwillingly became a global bank, experiencing a sharp exchange rate appreciation. All in all, however, the macroeconomic benefits are very likely to outweigh the risks. Research suggests that by exploiting high demand for dollar-denominated assets, the US Treasury has historically generated revenues of about 0.25 percentage point of GDP per year. This figure is likely to be much higher, twice as large for the euro area. This means several billions of euros every year. More importantly, Russia's unjustified aggression against Ukraine reminded us that these considerations are, at best, only half the story. The other half has to do more with politics than economics. In a politically volatile world, a country that issues an international currency is less exposed to financial threats from hostile nations. The reason is very simple. Its payments and financial flows do not require the use of other currencies. In and of itself, an international currency is a pillar of a jurisdiction's strategic autonomy. I believe Europeans fully appreciate this function today. The issuer of a global currency can actually go further and use its financial power to actively influence international developments. But this power must be used wisely, because weaponizing a currency may stimulate the emergence of alternatives. The case of the renminbi is instructive in this respect. The Chinese authorities are explicitly promoting the role of the renminbi on the global stage and encouraging its use in other countries, including those countries that have been sanctioned after Russia's unjustified aggression against Ukraine. As a result, at the end of 2023, the renminbi overtook the euro as the second most used currency for trade finance and the yen as the fourth most used currency for global payments. There is little evidence so far that political fragmentation is systematically translating into currency fragmentation. But we should be alert to the possibility that politics will have a greater impact on international currencies in the coming years, and vice versa. Let me now examine how the euro performed during its 25-year journey. Broadly speaking, the euro's share in global portfolios fluctuated between 17 and 25%. The dollar share is, and has always been, much larger, around 60%. Given that the size of the US and euro area economies is roughly the same, one may think that the euro is punching below its weight. The data give clear clues on why and when the euro has not gained ground in global markets. The share of the euro in global markets declined significantly during the sovereign debt crisis. At that time, investors believed that the monetary union could break up under pressure. Procyclical policies and conflicting messages from policymakers did little to reassure them. As a result, the euro inevitably lost ground. Now, let's fast forward to more recent times. Between 2020 and 2022, Europe was hit by a series of large and persistent supply shocks. The pandemic and the invasion of Ukraine caused a dramatic rise in uncertainty, disrupting production lines and trade flows. However, the shocks hit an institutional system that was better equipped to deal with them. And they were countered by a mix of strong and coherent policy responses at both European and national level. As a result, in the last 3 years, the euro held its ground and by some measures even strengthened. The bottom line is that the euro area can successfully withstand large shocks, but in order to do so, it must stick together and react with quick, determined, and appropriate policy responses. Let me now turn to the question of how can we strengthen the international role of the euro. In my view, the recipe has 3 key ingredients. The first and most obvious one is macroeconomic stability. When foreign investors buy euro-denominated assets, they are effectively investing in our economy. The dividend that they expect is economic growth and low and stable inflation. And the only way to protect this dividend is to implement credible, effective, and counter-cyclical macroeconomic policies. The second ingredient is a liquid and integrated capital market. This is hardly a new topic. Vice President Dombrovskis mentioned and described it in detail. We all know that a fully fledged capital market union could play a key role in Europe. What is less known is that the capital market union would also boost the global role of the euro. Over the past 25 years, the global circulation of the euro followed the same path as financial integration within the eurozone. Measuring financial integration is not easy, but most indicators tell the same story. Integration rose steadily in the early 2000s. It then dropped to a minimum in the sovereign debt crisis and resumed in 2012 after the launch of the banking union and the ECB's outright monetary transaction. And it maintained its momentum throughout the COVID pandemic. This synchrony between integration and the international role of the euro is no coincidence. The global relevance of the euro goes hand in hand with the degree of financial integration within the European Monetary Union. The problem is that, all in all, European markets are about as integrated today as they were in 2003, 2004. How can we do better? I would like to mention two limitations of the current setup that I see as critical from a CMU and global euro perspective. One is the lack of a European safe asset. A common risk-free benchmark would facilitate the pricing of other financial products and provide collateral for centralized screening activities and cross-border trading in interbank markets. It would also form the basis of the international reserves held by foreign central banks. The issuance of the next generation EU bonds is a first important and welcome step in the right direction, but a one-off program is not a game changer. To stimulate the development of a CMU, capital market union, and strengthen the international role of the euro, we would need a steady, predictable supply of European safe assets. The second limitation is that we do not have a full-fledged banking union yet. The creation of a single supervisory mechanism and a single resolution mechanism was a quantum leap in this respect, but it was not sufficient. The European banking sector remains largely segmented along national lines. This hinders the capital markets union because banks play a key role in financial markets. They have a pivotal role as asset managers, financial advisors, market makers. It is therefore difficult to imagine a genuine capital markets union without banks that are the main players in capital markets being able to operate smoothly throughout the entire euro area. Improving in these dimensions is as important as ever. In the coming years, Europe may have to navigate a more challenging global political environment than in the past, and a fully functioning capital markets union would greatly enhance its chances of success. The third ingredient that is needed to strengthen the international role of the euro is payment and market infrastructures fit for the 21st century. A central bank digital currency, CBDC, can play an important role on this front. And the good news here, not because I've been in charge of this project, the good news is that Europe is in many ways at the forefront of the progress in this area at the global level. Also from the legislative viewpoint, the Commission has just published a legislative proposal, which is an advanced legislation that other countries do not have, other major countries do not have. In addition to making life easier for European citizens, a digital euro, the retail CBDC that is being considered by the euro system, would offer great opportunities at international level if it could be made available outside the euro area or used for cross-currency payments. The same applies to a wholesale CBDC, that is CBDC used by banks for interbank payments. Unlike the retail version, this is already a reality. The target infrastructure which is operated by the Eurosystem, the European Central Bank and the national central banks, allows banks to settle digital euro interbank transactions in central bank money via a central ledger. And this infrastructure has been operating successfully for decades. Building on this experience, the Eurosystem is now exploring new solutions based on advanced technologies, such as distributed ledger technology. Other initiatives launched to modernize the EU financial sector include developing the Eurosystem collateral management system, adopting the new EU regulation for markets in crypto assets, and revising the European market infrastructure regulation, and many others. As well as supporting the role of the euro, these initiatives could give a much-needed boost to global cross-border payments, which are currently expensive, sluggish, and not very inclusive, to put it mildly. Ladies and gentlemen, to conclude, let me step back from the technicalities and get back to the big picture. The rise and fall of global currencies is often seen as a structural process that unfolds slowly and smoothly over time. History tells us otherwise. In the last century, the dollar overtook sterling as the main invoicing currency in the immediate aftermath of the First World War and equaled its share of global bond issuance around 1929, very rapidly. However, the rise of the dollar reversed sharply with the Great Depression, and the two currencies, the dollar and the sterling, coexisted at the apex of a bipolar monetary system until the 1950s. In short, the making or unmaking of an international currency is not only complex, but also volatile, non-linear, and less predictable than most people think. This means that the international role of the euro is not set in stone. Over the next few decades, the euro could maintain its role, be relegated to the periphery of the global monetary system, or gain a stronger position at its center. And we like the last hypothesis. To strengthen its role, we need macroeconomic stability, a fully fledged banking and capital markets union, and dynamic, future-proof payment and market infrastructures. The common thread behind these initiatives is that they all reinforce the European integration process. They would allow us to build on our past achievements and take the economic and monetary union a step closer to a truly integrated monetary, fiscal, and political union. The stakes are very high because the EMU is much more than just an economic arrangement. It reflects the dedication of its members to European unification. In times of geopolitical tensions, the European Economic and Monetary Union also functions as a collective defense clause. Any attack against a member of the Union affects the single currency, which is a crucial pillar of our shared sovereignty, and is consequently an attack against the entire Union. The EMU is a vehicle that generations of Europeans have built to pursue peace, freedom, and prosperity together. It embodies their desire to work together on the world stage. As such, it deserves our unwavering support. Thank you very much for your attention.
Thank you, Governor Panetta. Now, after these rich introductory speeches, we will proceed with the panel discussions. And for that, I would like to ask on the stage Lukas Ilves, Undersecretary for Digital Transition at the Estonian Ministry of Economic Affairs and Communication. And he will be the moderator of the panel. So I hand over to you. Thank you.
Please, all of our panelists, please join me.
We shake hands again.
Exactly, this morning. So, ladies and gentlemen, thank you, gentlemen, for those speeches. I think they set the scene well. We live in an era of convergence where political and economic considerations are increasingly connected to technological considerations. And I think this is what you talked about in your opening speeches. We see this in great power rivalry, where the Chinese-American rivalry is in many ways now being denominated by the question of who has access to artificial intelligence chips. We see this on the battlefield in Ukraine, where algorithms and data have made a real difference on how people are able to use artillery to achieve their battlefield outcomes. And thus it will also be for the future of money. Alongside economics and politics, technology will determine the outlines of tomorrow's monetary and financial system. So today, as we heard, the euro is the second most important currency in the world. But the question we face is, will it remain so? The world of money and payments is changing rapidly. Digital wallets, mobile application, instant payments are replacing debit and credit cards and traditional bank transfers. Crypto assets are trying to revolutionize how payments work as a whole. And in the euro area, outside service providers account for a large share of these new possibilities, while European private sector alternatives are mostly national in scope. Finally, we know that many economies are looking to dethrone the role of the dollar. But are they really interested in replacing that with a dominant euro, or do they want something else? So we heard that many central banks across the world, including the euro system, are developing digital currencies, which would provide alternative means of payments that are secure, efficient, easily accessible. This will be a major new public infrastructure. But how will this infrastructure interact with private sector solutions? What do we need to do to ensure that Europe's payments and financial services don't go the way of European tech companies, displaced by their American and Chinese competitors? And what will the tangible benefits to users be? To discuss all of this, I could not imagine a better panel than the one we have assembled here. We've already had glowing introductions for the executive vice president and for the governor, so I'm not going to repeat those other than that it's a privilege to have both the father of the euro in Latvia and the father of the digital euro together. But we're also joined by Cecilia Bonefeld-Dahl, who is the Director General of Digital Europe, the leading technology industry association, which represents more than 45,000 digital companies in Europe. I've worked alongside Cecilia for many years in Brussels, and I continue to see her at gatherings like this, and I can tell you she is the best advocate that Europe's tech sector has. But she's also played a tireless role advocating in the last 2 years for Ukraine, putting a lot of personal effort into bringing the entire European tech sector behind Ukraine and supporting the government and the people of Ukraine, both there in Ukraine as well as refugees across Europe. And before she took leadership of Digital Europe, she had more than 25 years of experience in the tech industry. She's held international positions at IBM, at Oracle, and at various small European companies building businesses in China and Europe. She was a board member of the Danish Chamber of Commerce and president of the Danish ICT Association. So she knows tech, she knows politics, she knows business. And finally, we have Valdis Bergs. He's chairman of the board at Mobili. Mobili is a major payment services company here in Latvia. They're the largest provider of mobile parking payments with significant business lines in transport and event ticket sales. And Mobili is eyeing further expansion across the region into new spaces of mobile payments. Valdis is a lawyer by training, so he sees, again, multiple disciplines here. But what I think is most important is that alongside, officials and politicians, we have someone who's really on the ground right now and who, when we get to the digital euro, is going to have to be implementing it and whose daily bread will depend on how we build tomorrow's payments landscape. So what we're going to do is I'm going to ask Cecilia and Valdis just to start off with some brief opening statements of their own, and then we're going to launch into a discussion, and we will have some time for questions at the end. So with that, Cecilia, I hand over to you.
Thank you so much, and thank you for the comprehensive introduction. I must, first of all, of course, say a big thank you to EVP Dombrovskis and for your invitation and for the great collaboration that we have had on several of these agenda, not only on the euro, but on the international landscape and the TTC and many other international collaborations that we have in the EU. And of course, congratulations on the 10 years with the euro. As a Dane, I only hope that that we somehow will follow one day. For different reasons, we're not there, but I can only say that if I would make a recommendation as a politician, I would recommend us to join immediately. Well, maybe to start with that, being a part of Europe and being a part of the euro is for, you know, the enlightened people who knows how important it is, and I think we can say that we all do in this room, is inevitable and of course logical, and it is something that we can all agree on. But for some countries, it's still also an emotional attachment to a currency. And I think the same case will be for the digital euro. What is this digital? Do we really need it? What is this, you know? And we can sit here as digital Europe or as Europe and look at it, but that is the reality that we basically need to address if we, for example, want something, the next step, the digital euro, to become a reality. We need to translate it into real benefits for citizens so they understand the combination of currency, their coin with the queen, the king, the president, and the emotional need for security in a united Europe. If we can actually manage to get that connection between a digital euro and the need for security and unity in Europe in times of geopolitical tensions, that would be the first step for me. Technically, yes, we can do it. We heard Governor Panetta saying this is actually, the infrastructure is already there. We have the innovation. Private sector, exactly. I mean, we do have very strong innovators, and we need to make this a public-private partnership. And remember that in times where we need stability, the private and public sector collaboration is absolutely crucial. We cannot make this only a banking or a public sector program. We need to build the strong innovators around a digital euro. We have seen this development. If we look at, for example, the newspapers and the media, you know, it used to be a government program. You had the newspapers, somehow you were more or less in control of the communication. Well, private sector innovation has basically been running ahead. And instead of just being the regulators, I think we have seen the countries that really succeed in banking, in digital banking, like Denmark, like Estonia. This has been a close collaboration with the strong, innovative powers of the private sector, and of course the regulators and the policymakers hand in hand. Only the ones who hold the digital future also holds the future of security. Cybersecurity attacks have been increasing 250% over the last few years. It is defined as the single most largest risk for financial stability. So who holds the competences basically of making sure that we are not attacked? We saw in Ukraine what happened. They called upon private sector, Microsoft, many of the big companies that has the top notches in cybersecurity stepped in and helped to get the data out of Ukraine, helped to basically maintain stability in the financial systems, in the public sector systems. So only through a really strong collaboration on private and public sector and walking hand in hand on a digital euro, we can basically make sure that we retain that stability and that we are always on the forefront and ahead of our enemies. So is this digital Europe going to be the next big step? I think so. 3 things to say about it. Citizens need to feel it at their heart. So it is not a threat, but an opportunity. Private sector needs to be heavily involved to maintain both the security and the innovative powers around the digital euro. And yes, why not? But let's make sure that we make it clear why we are moving there, how we are moving there, and that we make it a project where private and public sector walk hand in hand on innovation. Thank you so much.
Thank you. Shall we clap? I want to ask one question that's not about the digital euro or the euro in general before we get there. If we look at this technological transition and compare it to other changes we've seen in the last decade or two, Europe hasn't done terribly well. European companies have been displaced by American and Chinese competitors. Just in a minute or two, if we make a structural comparison, what are the lessons we can learn from other sectors as regulators, as market orchestrators to not repeat some of those mistakes?
Well, when you move into the digital age, I mean, speed and scale is basically, I mean, the two components that you need. And although we kind of politically adjusted our regulatory system, the capital market union was not a reality and is still not a reality, meaning that we have huge fragmentations. So the speed and the scale just does not exist like it has done. Let's compare ourselves to US. Another thing that US have had is that they have had huge military spendings at scale, not in Latvia, Denmark, Germany, but in US. And many of the spin-offs at the internet or what we see today has actually come out of public sector innovations in military spendings, which of course, I mean, we have woken up to the fact that we have not spent enough on security innovation across the board and the private public sector collaboration on some of these areas. So I would say we really need to look at how we implement and stop only regulating our way to success, but how we innovate and create the scalability of companies across border. We have only 8% of our SMEs trading across one European border. If we call that a success of the internal market, I think we need to think again, because the scalability of the digital age started 20 years ago, I would say even 25 years ago. AI is not a new thing that we need to necessarily only look on regulation. It is actually a scalable technology that needs to grow fast across border in Europe. So for me, the next commission, the next step for scalability and also for the digital euro to actually succeed is basically breaking down national barriers and to stop thinking about how we can still be nations, but how we can govern as a continent. And that is not only for, I would say, for the sake of the economy, but also for the sake of our future of security. How we do that, it takes a bit less, ego on the nation state and a bit more tapping into the EU. And of course, I mean, Latvia is walking on the forefront of that, but we do have other nations that needs heavily keeping up on understanding how the real, private economy works on the digital age.
Thank you. Valdis Bergs, I'm going to hand over to you. Tell us a little bit about mobility, and you're looking at what might be the future payments infrastructure. You're in the payment space. What does that mean for you?
Thank you. And I really like your introduction stating that really we will be on the practical side of introducing, any new digital payments needs. And a few thoughts on what are our business expectations on digital euro. First is quite clear business case. Cash euro is free. Online payments bear a cost. And our processing cost at the moment is the next highest way to spend our earnings after salaries. So it's a high point of cost. Then the next step where we should have a clear understanding is the clearing process. So we would look at swift and clear clearing process because merchants are expecting that. And here I have to mention that the Bank of Latvia already is giving access to EMIs to their clearing system, and I think that it's already a considerably great next step for providing better solutions for all our customers. But of course, if we are talking about the digital euro, from legal perspective, so it will be a legal tender. If it's a legal tender, it has to be accepted everywhere throughout the Eurozone, and the infrastructure has to be in place. Either it's offline, online, in places where online is not possible. So there is a lot of infrastructure work that has to be implemented. Even here in Latvia, where I think we are one of the most online covered nations in Europe, there still are spots where this is too costly or just not possible. So there have to be these solutions to provide complete trust, both from the users and from merchants. And from our, as an EMI perspective, of course, innovation will be the greatest driver of digital euro. So the possibility to program payments, to provide different payment documentation via the transaction, like receipts, other proof necessary for the client. And if this innovation jointly with trust and availability for everyone across all the countries in Europe with different infrastructures at the moment will be provided, then this project will be a success.
But let me maybe ask more concretely. You're looking to expand to other countries in Europe, maybe come kick out some of your Estonian competitors up north. Cecilia just talked about the challenges with cross-border SMEs. What do you need from a digital euro so that as you look at your regional expansion and then next step you go and take the European market, that you can actually do that you're not hampered by the national borders? What do you need the executive vice president and the governor as part of the euro system to give you as an infrastructure so that you can be successful?
What would be the most important need? It's access to simple clearing and widely accepted means of payment. Now I have to compare it with the PSD2 solutions, which we already have. And the problem with PSD2 is that there is no common technical standard and no common rules also from the business perspective. So if we compare PSD2 solutions to card payments, of course, from the ease of access and availability to merchants, the card payments win. I would see the digital euro access something better and easier to access cross-border than the card processing. So then we would have these gains.
So I want to ask then the vice president and then the governor. You've heard some of the needs from business, some very specific technical needs, the broader conceptual needs. Do you think the digital euro will deliver?
Good morning. Once again, maybe let me first come back to this question raised by Mr. Bergs on legal tender status. Just to explain a bit the interpretation of the legal tender as we are currently seeing it. As you know, we have proposed a legal tender status for digital euro, but also for euro cash. And we provided interpretation. What does it mean? It means that legal tender has to be widely accepted in each member state and widely available in each member state. We do not make an obligation that it has to be 100% accepted. So to use classical examples, you know, if you have this tiny little stand where you sell the lemonade, and if you only take cash, it can be accepted. If you only take cards, it also can be accepted. Basically, we leave to member states also based a bit on national traditions, because some countries are more cash-based, some countries are less cash-based, where this level of wide acceptance exactly is. Okay, we kind of expect that where some necessities are being sold, like supermarkets where people are buying food, legal tender has to be accepted. Pharmacies where people are buying medicines they need, legal tender has to be accepted. But like not everywhere 100%, just from efficiency and cost grounds, especially for tiny little businesses to reduce operational costs if it needs. But that's a bit of a remark. And indeed, when we were discussing this question of introduction of digital euro, we were looking at a number of parameters. And actually, we had been working very closely with Mr. Panetta on this in our respective capacities as the ECB Executive Board and in European Commission, because it required actually close cooperation of two institutions. Obviously, one aspect we were looking is payment infrastructures and how a digital euro would interact with private payment infrastructures, to which extent it's possible to have complementary solutions. And that's what we were actually aiming for, also not to undermine private solutions which are there. And we had also a number of dedicated roundtables with the financial sector to discuss those topics and find this right balance. Of course, this work is not over. We now moved from what is called investigative stage of the digital euro to preparatory stage. So certainly this work still continues, and we will be fine-tuning those solutions which we are having, and also the legislative process on the digital euro, on the legislative proposal of digital euro is still in process, so also co-legislators may bring some adjustments in this. So from that point of view, it's important that the voice of business is heard right now, that you're also active in discussion with European co-legislators, Council, European Parliament, that this a question of, amongst other things, of interaction between digital euro and private payment infrastructures is also kept in mind by co-legislators.
Governor Panetta, do you think that the concerns we've had here and the needs are going to be addressed?
Let me do some preliminary remarks to clarify why the Eurosystem started to work on this digital euro project. And the reason is very simple, because we observe that cash is used less and less, especially after the pandemic. Consumers, European consumers, pay much less with cash and increasingly prefer to pay with digital payments. Second reason is that e-commerce is becoming more popular. It's not very convenient to pay cash when you buy online. So if these two trends would continue, it would mean that over time, public money, this cash, banknotes, would become a marginal means of payment. And this has two major problems. The first one is that we would be a state without money. No precedent in history. Never happened. Because as I tried to argue in my introduction, money, public money, is the symbol of the strength, the credibility, the authority of the state. We cannot think of a state without its money, certainly not for a jurisdiction like the euro area, which is the second largest economic area at the global level. The second problem is that public money, central bank money, performs a very peculiar role in monetary and payment systems. It is what we call, economists call, a monetary anchor. What does this mean? It is the benchmark against which we all assess the value of privately issued money, bank deposits. Now we have strong banks, we have banking supervision, capital requirements, deposit insurance, but crisis, banking crisis, although they are, thank God, rare events, they have not disappeared. And one simple way when you have uncertainty to assess the value of your deposit, bank deposit, is to check its value against the safe asset, which is cash. Now, the very simple way in which we do this every day is just to go to an ATM, cash dispenser. If you can withdraw cash out of your bank deposit, this means that your bank deposit is worth the nominal value. So we do need, for stability reasons, to have public money. So these are the reasons why we started this project and why we are building this for the euro area. Now, on whether or not we will, let me correct one thing which you said. You said I'm the father of the digital euro. The digital euro is a strange animal which has many fathers, without offense to anybody, because here we have the governor of the Central Bank of Latvia, we have Burkhard Batz, who's Professor Batz, who's a board member at the Bundesbank. It is a joint project by the ECB and the national central banks. But not only that, I'm not even the father because I moved to the Bank of Italy, so I'm the grandfather because my successor is taking care of the digital euro. So strange animal with many fathers, now one grandfather, which is a peculiar. Okay, and shall we deliver? Well, it is done to serve citizens. So it will be, in the end, a choice based on the needs by citizens. And so far, we are seeing increasing support for the digital euro. We will deliver, it's a decision by the Governing Council of the European Central Bank, which will be taken in collaboration with other institutions, first and foremost the European Commission, but the European Parliament, the Council. It's not just a technical decision to issue a new means of payment. It's like the introduction of the euro. I think after the introduction of the euro is the most important development we will see, if we will see it in the future. So it will be a decision which has to see the Governing Council agree, but it will be a broader decision because it will be a sea change. There was a comment on whether it will be used cross-border. I believe that the difficulty of using digital euro cross-border means not between different countries of the monetary union. That's domestic. Between the euro area and other areas, the problem is not a technical problem. The problem is an economic and a political problem. It's very easy to design a means of payment that can be used cross-border. We have credit cards that do that already. Problem is, first, the euro area is a large jurisdiction. Its currency is a safe money. It is possible and maybe likely for some countries that there is of currency substitution. So it will be issued and used cross-border with an agreement between the issuing jurisdiction, the euro area, the ECB, the authorities, and countries outside the monetary union. Second, it's a political issue because it is necessary to agree on the confidentiality of the information. If you have different jurisdictions that have different privacy regimes, then before starting to trade digitally, you have to agree on what is the degree of protection of personal confidential information. In the euro area, the legislative proposal which has been issued by the Commission protects to the maximum extent possible privacy. Confidentiality is a distinctive feature of the digital euro, but this is not the same in other jurisdictions. There are other large countries, I don't want to mention anyone, which do not have the same approach to protecting personal information. So that is the most difficult part, because the global central banks are already discussing how to build interoperable digital currency, central bank digital currency. But then we had to agree on the governance. That's the difficult part. And that's the difficult part also for cross-border payments in general. It would be relatively easy to link national payment systems together in different countries, but then we have to agree who is responsible for managing the information on the payers, on the payees, who would protect that information, who guarantees. That is the difficult part, but we will get there.
The practical question, and I see that Cecilia maybe wants to ask the same question, but I have to follow up. You said you're introducing something as big as the euro. It's coming into a competitive landscape. What are the things you have to get right so that it's actually, as Cecilia said, welcomed into their heart by consumers? Because this isn't just a background payments infrastructure you're talking about.
Many. It's a complex project. It would be about issuing a means of payment that can be used simultaneously in 20 different countries with different structures of their banking system, with different existing digital means of payment, with different legislations, where certainly it has to be easy to use, because we don't want to introduce anything that requires more than 2 clicks to be used. Let's say 3, but not more than that. It has to be safe, because when you offer a means of payment that people use to spend their money, to save their part of their money, it has to be safe. Third, we have conducted surveys at a European level. And the topic I just mentioned, privacy, ranks very high, I would say, is the most important element, which is mentioned by consumers as the necessary requirement for a digital means of payment. Europeans want to be 100%, maybe even more than 100% sure that their confidential information will be in safe hands. And as I mentioned before, the proposal issued by European Commission guarantees this, because first, the operator, the future operator of the digital euro, that is the ECB, the euro system, would have no access to personal information. So not even the temptation, because nobody could look into the details of the payments of the users of a digital euro. We would know that there has been a transaction with some cryptographic code, but nobody would know who is the payer, who is the payee, and what is the reason why the payment was completed. So there are many others, but I think these are the most important ones. Simple, safe, protection of privacy.
Vice President Dombrovskis, I want to give you the floor, but also ask a question. Let's say this all is in place. Let's say we had the digital euro today. How would it help us with the economic circumstances that Europe faces? How would it help with growth in Latvia, Estonia, and Germany?
Maybe before I come to this question, I just wanted to follow up on your previous question. Well, maybe we are optimists, but our worry is not that the digital euro would not be popular. Our worry is that digital euro would be too popular. So, and that's why part of the proposal is to limit the role of digital euro as a store of value. Because we do not want to create some kind of financial disintermediation and undermine the role of banking sector correspondingly as providing credit to the economy. Because if all the bank deposits were moved to the digital euro in central bank, suddenly banks would not have a deposit base which is base for them to provide credit to the economy. So actually one safeguard which we are introducing is limitations on this store of money property of digital euro. And another safeguard which we are introducing, we are at this initial stage treading carefully with international role of digital euro. In a sense, not to arrive at some effects where that would undermine the monetary sovereignty of other countries. Okay, we don't know quite all the effects because basically we are here in uncharted territory. We know that, well, euro cash is widely used outside Eurozone and we do not see issues with this, nor the countries see issues with this. But for digital euro, we just don't know all the effects. So we're at this initial stage careful also about how the digital euro would operate outside Eurozone. So, but coming to your question, how it would help economy in Latvia and other countries across the EU, well, if we have safe, efficient digital payments, that strengthens the role of the euro in the economy, and we already were discussing it also at our speeches in a conference on how euro is actually helping with economic growth in Eurozone countries and how it has helped in particular in case of Latvia. So from that point of view, the point is that euro needs to walk in step with the times, with the declining use of cash which we are seeing. We need this digital central bank currency, so the central bank currency also needs to move to the digital age. So that's a question more still, I would say, of the overall role of the euro, but clearly we need smoothly functioning payment solutions for the euro to fully, for the digital euro to fully play this role.
Cecilia?
Yeah, no, I mean, I'm just returning also to one statement. Initially, I think it was said that the currency is the pillar of the strategic autonomy, and it makes us less dependent. And just returning to that, you asked me, what are some of the learnings that this disruptive age of digital has given us? When one of them is that we have everything in regulation. As you said, we have the GDPR, we have, you know, interoperability of data, we have money laundering rules, we have everything in place. We also invest heavily in excellence, whether that is in microchips or whether it's in fintech. You know, a lot of public spending goes to excellence. But one of the things that we didn't succeed is actually of developing some of these big new companies in tech. And of course, I mean, the euro and the financial system being one of the major pillars of stability in a society, we need to be on that wagon on growing some of these big fintechs. So I'm just saying we need to start measuring what success looks like. What are the KPIs that in 5 or 10 years we'd like to look at and say, we achieved this? Is it that we have maybe 50% of the world's largest fintech companies are European? Did they actually come out of this development and increased our stability in this private and public sector collaboration? In one of those pillars that are of essential open strategic autonomy? Is it that 80% or 70% or whatever of our SMEs and citizens trust and use our digital euro at home and abroad? So some of these targets will guide how we approach this, not only through the technical regulation and monetary sense, but how we really build an ecosystem that makes Europe stronger across the board of private and public sector. Excellence to me means that we actually built an ecosystem of innovation, not only the rule set that we would like to actually comply. And saying that, it's not about only the what, it's also about the how. One idea could be to start small. You know, don't be too specific in the regulations, but actually have sandboxing pilots where private sector can actually play a major role in defining the standards, in defining how to find the solutions. And of course, to look at how the investment environment of these private sector companies can actually stay in Europe and be a part of this development of the digital euro implementation within Europe and beyond, I would say.
Valdis Bergs, I want to ask you, I mean, effectively we're talking about a product launch here, a product that you would use, a product that your consumers would use. If you look at the upcoming product launch, as it were, of the digital euro, do you have any advice for the product owners, for the product developers around what they should do with their product?
Oh, yeah. So I think that the first lesson that we learned when launching new products is that they have to be reliable and simple. So these are the two most crucial components of any product. So if it's not reliable, our client service center will be with a lot of calls and complaints, and we don't want to do that. And of course, if it's not simple, the consumers will not use it. And for any product that is intended for very broad use, it's quite essential. I think that the current digital banking solutions or any digital payments, they are used because they are easy. And onboarding has to be easy, so the same solution has to be easy. And of course, there is always a trade-off because between ease of access and security. So there is somewhere this sweet spot, because we don't want to do a lot of steps on KYC or third factor authorizations for small payments. But of course, there is also this security aspect. So I think that it's crucial to find the perfect balance. So it's easy for use and secure enough to ensure trust and that it operates in all circumstances.
As a follow-up, do you see that a digital euro replaces the ecosystem that you're using right now for making payments, or it's one more solution that you sort of have to integrate but run in parallel with the existing connections you have to banks and credit cards?
I'm sure that it will be one more means of payment. And we will see gradually how that will develop. Will the card payment part decrease and the digital euro increase or not? And I think it's greatly dependent on the design of the digital euro system and the possibilities, what we can put on top, where and how we can innovate, because the public will use something that's more innovative, easier, provides more opportunities. And if that opportunity for the business is in place, then it can be successful, because, well, the central ECB, the central bank, the public sector will not innovate, but it has to provide the opportunities to do that through the private sector.
So I think what I'm hearing from both of you is that on top of the policy rationales and the economic rationales, we're now entering into territory. If you're providing a tech product, you also have to think about how it is that you build and you launch a technology product. Governor Panetta, you of course mentioned that Europe will be the first major economy to do something like this. But there have been other experiments with central bank digital currencies in smaller countries in Europe and elsewhere, pilots. And while not central bank digital currencies, we've had large economies like Brazil, India, and of course China that have completely revolutionized their payments landscapes in the last 10 years. What lessons can we learn from them, positive, negative?
Well, the first lesson is that it is very complex to introduce a central bank digital currency. You mentioned China, which has not introduced, it is experimenting digital renminbi. China started to work on its digital renminbi project back in 2014, now for 10 years. The state is not a startup that could introduce one product, then it doesn't work, then you introduce another. States must safeguard their reputation, credibility. They cannot go and offer to citizens products that are not 100% safe. So it's a long process. Second, there's a lot of uncertainty yet on the technology. There are discussions on whether the most appropriate technology is based on centralized ledgers or whether decentralized DLT ledgers. DLT has many advantages, but there's no example of scalability for the dimension of such a huge project. And also for Europe, the problem is that if you want to use DLT technology, there's no European producer of DLT technology. You have many users, but then if you want to deal with a company that produces DLT technology, you have to deal with UK, US, Indian, and other countries, technologies in other countries that would not be in line with the sovereign autonomy objective of the digital euro. So it's a complex project. It takes time. Technology is also complicated. The other big lesson is that, an essential feature of any digital currency is that it would be fully interoperable with private digital means of payments. And this is also fairly complicated. An additional challenge is what Vice President Dombrovskis mentioned, because the problem with central bank digital currencies is that they could crowd out banks. So you want to find the right combination of ease of use, convenience, but you don't want to be too successful because you don't want to disrupt the financing of the real economy, and banks are now performing that role. So there are a number of ingredients. The challenge that is looming that will be addressed in the coming years is cross-border interoperability. Because now, as you can easily imagine, all major central banks are focused on domestic objectives. When we were working on our investigation phase, we were focused on the indications which came from the European Commission, the member states, Parliament, and it was way too early to start discussing with other jurisdictions, because the first thing we have to do to respect European legislation, and others are in the same situation. India, they have also passed their, or issued their legislative proposal, and the experimentation that they are doing aims at being, of course, 100% in line with the legislative proposal they have, which is not 100% in line with our proposal. At a certain point, we will have to square the circle and make all this compatible. We are already working, but the joint efforts are on two levels. One, in a very broad, very high level, at the international level, the G7, the G20, the Financial Stability Board are discussing and have approved general principles for the governance of CBDCs, but that's too early. And at the technical level, the central banks are already discussing, based on their ongoing projects, how to make them interoperable in the future.
Thank you. Vice President Dombrovskis, this is unusual that you have someone who's launching a product and then they say, well, we don't want it to be too successful. Mm-hmm. How do you think about that? What does too successful mean for the European economy? What would the impacts of that be?
Well, first of all, what we want to achieve is a digital euro which is widely used, well, within certain limits, as we discussed, which is coming back to what Mr. Bergs said, which is easy to be used with a good functionality. I probably in this context wanted to come back to through two aspects which were discussed, which is on a privacy and functionality. In terms of privacy, indeed, we are committed to high standards of privacy. Already now, when you do digital payments, banks, payment service providers know certain information about you. I would say with a digital euro, private sector operators would know less about you and your transactions than with current digital means of payments. But it's not 100% privacy or 100% unanimity, because we also have our anti-money laundering, counter-terrorist financing framework, which needs to be observed, whether it's private digital means of payments or digital euro. But at the same time, in terms of functionality, we are actually seeing at the end of the day two functionalities of the digital euro. One is online functionality and another is offline functionality. And for this offline functionality, we could provide, in a sense, even more privacy, because that would be a small, low-risk transactions in a physical proximity, via, if it's some kind of, say, digital euro apps, via mobile phones, Bluetooth, or other means of connection, which is basically small transactions, similar as now people are just paying each other cash for whatever reasons. For those low-risk transactions, we would try to, in a sense, replicate almost a cash level of privacy or unanimity.
Thank you. We have not too many minutes left, so I also want to give a chance for questions from the floor. If you have a question, please raise your hand, and then the ladies and the gentlemen with the microphones will come and find you. No questions. Such a complex question on the future of money and payments that everyone's stunned. I think we have one in the corner. I can keep on going with questions then.
You can conclude that we have been very clear, eh?
Well, so let's talk a bit more about the security element, right? Today, financial services are amongst the most cyber-attacked infrastructures in the world. And Cecilia talked about the effort that private sector companies put into building the robustness of their infrastructures. And we've seen examples of central banks, thankfully not in Europe, who are compromised, and literally billions of dollars or euros flow from the national treasury. So if we're doing this infrastructural revolution, what do we need to do to make sure that we don't also paint a giant target? I don't mean the intra-European payment system on our back that welcomes in sort of the next round of attacks and in effect opens up new forms of vulnerability, either for the system as a whole or for individual consumers. Governor Panetta, if you want to start with that.
Absolutely. As I mentioned before, safety is an essential feature of the digital euro, and protection against cyber attack is also an essential feature. I will not go into the details for one very simple reason. I could not go into it. I'm not an expert of this, but let me give you one information. The euro system, which will operate the digital euro, is already providing safety to its digital payment infrastructures that are used all over Europe. So the target 2 system, which I mentioned before, the target 2 securities, the infrastructure which we call TIPS, which are used, the first one target for interbank payments. Interbank payments among all European central commercial banks are done by using, realized by using infrastructures which are operated by the euro system. Securities transactions are realized through our target 2 securities infrastructure. And citizens can already do bank transfers in real time with the system which is called TIPS, which is also operated by the euro system. All these 3 critical infrastructures for the European financial system are operated, and the cybersecurity is taken care of by the euro system. So we have experts at the national central banks who are actively working now, as I said before in my introduction, for decades to protect the security of our infrastructures. I cannot go into the details because my colleagues tell me many complicated things which I cannot. I'm not that easy in discussing the technical issues, but the issue is crucial, and we are investing a lot in technology. We have cryptographers, physicists, mathematicians, data scientists, computer scientists, which are taking care of our IT systems and of the infrastructures that already regulate and serve the European citizens for decades.
Well, if you think about security on the side of Valdis Bergs, I apologize, we have two Valdises on the panel. Security from the perspective of an end user company, how does your security have to layer together with what's provided to you by the payments infrastructure?
Security is a major issue, and it's not a secret that since invasion in Ukraine, hacking wave is just flowing over European companies, financial companies. Well, I think every day somebody is trying to hack us and they are not successful, and it will be so in the future. And thought about security and investment in security, it's like a standard of living today. But what is becoming more and more important, it's not the hacking of systems, because we know how to protect ourselves from that. But the weak link in any security system is a person. And we see more and more these fraudulent messages, AI capabilities of impersonating another person in deep faking faces, voice, etc. So what we have to be ready for is that these technologies will evolve, and fraud, as any criminal enterprise, will have means when the technology advances, and we have to protect ourselves. So I think psychology, use of knowledge of human behavior will be essential. How to protect ourselves, how we will ensure that the person will not fall for that fraud person without any specific knowledge in those means of fraud and impersonation.
Cecilia, you want to add?
No, it's just, I think your point just highlights the complexity when things, how different it is when it moves to digital, right? There's so many opportunities. I mean, the ecosystem that you need to build around this implementation of a digital euro is totally different than a cash, right? Because you have AI players that are malicious. You need to lead on AI, be super on top of how you avoid these things. So you need to develop those capabilities around it, and which we can. We have some of the leading companies in AI, but unfortunately, I mean, Europe has not yet grown that strong ecosystem, so it has to go hand in hand. And I mean, just in fraud detection, also, for example, AI plays a huge role, right? Right now, we're busy regulating it instead of finding out where we really need to lead on these things to protect citizens and to protect our transactions. So my big take would be, we need the digital euro. We need to make this a success. Private sector needs to get at the table to basically define a how. Not only a what, because all the arguments of, how can you say, logical financial stability, a pillar of our future society makes sense, but unless you have that security on cybersecurity, on artificial intelligence, on the platforms that is behind that, and the innovative environment around it, it will be hard to see it fly. But I think it's just started. And that is the route we need to take to make sure that we build that, and that from the start we are all at the table to discuss those things. Maybe, I mean, we've seen EVP Dombrovskis taking Latvia also to the euro. We'll still see about the Danes if they ever join, but I do think that there is a next step, and right now there's a time in history where people like yourself has really have managed to show the value to the people and to the European member states of being a part of a larger family, also in not only the euro but a digital euro maybe in the future.
I'm going to give a second chance for one question. Good, we have a couple of hands now. The gentleman there in the middle. The microphone's coming.
Agris Sauts, Latvian Professional Insurance Brokers Association. My question is, currently, cybersecurity depends on cryptography. What are your expectations when the quantum computing becomes a reality?
And let's take the other question too, and then we'll answer those together and we'll wrap up.
Hello, thank you for discussion. First of all, Pavel Skuzmins, finance expert and consultant. I have a question about digital euro. Basically, digital euro potentially will shape and totally change the game. And do you feel ready, or do you expect potential resistance from the private banks and multinational companies like Visa, MasterCard, because potentially it will hurt their business in Europe sufficiently? Thank you.
Any volunteers? Vice President Dombrovskis.
Yeah, well, thank you for this question. Probably I'll start with a second question. Well, indeed, when you discuss with the financial sector, including banks, well, there are certain concerns from their side. We already touched upon these aspects of risks of disintermediation, that the money will flow from bank deposits to digital euro. So this is one worry which banks want to see properly addressed. Also, how this digital euro payment systems will interact with private digital payment systems is another topic, because normally we actually foresee for commercial banks the role, or other financial services providers' role in distributing the digital euro. We are not expecting that central banks will now operate with millions of citizens in every country. This role still also will be for the banks. So there are certain concerns. There are many questions. In any case, what it shows that this engagement with the private sector is key, that we need to discuss with them. They need to understand what is being prepared. We need to listen what are the concerns and maybe adjust certain things to make sure that this interaction is processing smoothly. On the first question which was asked on cybersecurity, well, it's for me it's difficult to answer. I'm not IT expert or cybersecurity expert to say how the situation will change with the quantum computing. I know that there had been some discussions that the quantum computing is actually able to break many state-of-the-art protection systems in short time to compare if it's done with conventional computers. So certainly it will bring new challenges, but I leave for IT experts to find a way to address those challenges because, well, security is an eternal issue. There is always, especially when you talk of money, somebody who tries to fraud this money out of people's or companies' pockets, and others which are trying to prevent it. And it has moved from physical bank robberies to cybersecurity, and certainly it will continue with the quantum computing, and IT experts will how to deal with this.
Governor Panetta?
Yeah, on the first question on the relationship with private banks. The broad majority of banks support the project. The Eurosystem has a frequent and continuous interaction with banks, with bank experts. They participate in expert groups in advising the Eurosystem on how to design the digital euro to be fully interoperable with market standards, which is an objective. In general, banks do want to understand because they want to make sure that they will not get problems rather than advantages from the digital euro. So the general relationship is one of full cooperation and mutual, even technical assistance. There are exceptions. There are some very vocal banks that I think are not understanding the strategic importance of the project, that do not understand that this is done to facilitate life for the banks themselves. Because think of the structure of the digital payments market now in the euro area. Digital payments are intermediated for more than 2/3 by non-European companies. On card payments by Visa and MasterCard, on digital non-card payments by PayPal. And they, in these two segments, represent 2/3 of the market. I think that if I were a banker, rather than being worried that a very strange supplier who does not want to become too successful, as Vice President Dombrovskis mentioned, could take my market shares, I would be more worried or more keen in getting back those 2/3 that I have already lost. And given that the Eurosystem and authorities in general are explaining at length in detail that they are doing this project to facilitate cross-border payments intermediated by banks, I think this second strategy, cooperation, is much wiser, and thank God the exceptions are exceptions. On quantum computing, I'm not an expert, but my experts tell me that with quantum computing, there are serious doubts on the possibility to protect data, but this is not a digital euro problem. This is a general problem of potential cyber attacks once quantum technology will be available. I cannot tell you more than this, but I rely on our experts who do understand these things and are working with other experts at large to try to address potential issues.
Brief comment by Cecilia, and then we're going to wrap up.
Yeah, no, I mean, so AI and quantum computing are two of the technologies that the Commission are currently defining as critical technologies, meaning that it means heavy investment, it means that we need to be leading on them to basically have a secure world. It means that we need either partners or less dependencies on non-partners in these areas, but there is no doubt that AI and quantum are the biggest at the moment. Maybe in 10 years it's totally different, but the two technologies that has the biggest impact on cybersecurity. Luckily, the democratic world still has an advantage there, but you know how innovation is. You need to stay at the forefront at all times, but luckily it's something that Europe has woken up to, and where we collaborate very closely with our like-minded partners. And of course, as you say, Panetta says that it's not a digital euro problem, it's a societal problem. And we can wave goodbye to GDPR and all the rules that we have if we don't stay in the forefront of these technologies. That's also a reality. So just on the players, of course, I mean, we have the banks, we have the Visas, the MasterCards, we have the tech innovators, we have all the scale-ups that are in fintech. So we have the whole community within Digital Europe. And of course, there is, I mean, what I find valuable is actually that they discuss together how they can make this work. And I think that's the most important discussion in this. This needs to work. And some of the concerns are not only of political importance of, you know, what do we want and big ideas. It's how do we do this in a safe way that makes us more resilient and more stable, which means that these players that are all at the table, they play a crucial role in the cybersecurity concerns. in the knowledge of how to do financial safe transactions. And of course, it needs to be a discussion with those market players as a whole. Some of the ideas on the table is like, should we start with one account per citizens with a limited amount of money to basically make sure that we don't get into, everybody taking their cash out or their digital cash out at the same time, or financial instability, or that there is too much complexities in the system from the start. Multiple things are being discussed in the industry associations right now, and we will basically come out with an idea on how to approach this in a way that works for the private sector and works for the citizens, and of course for the stability of Europe this summer. So hopefully in dialogue with our stakeholders, we are able to define the how and not only the what.
I'm going to now try and summarize in about 45 seconds what has been an extremely wide-ranging conversation. And I think perhaps what you heard at the beginning from the governor and the vice president, you heard about the strategic challenges that the euro faces, both domestically, what we've learned from the last decade, and globally. And we're now in a time period where part of solving that problem and facing those challenges is going to involve launching new technologies and new products. And so you've seen here an example of how different paradigms are going to have to come together, how the strategic considerations and what economists think about lead into discussions that look very different when we get into what it means to actually launch a product to deal with the security concerns, to facilitate its uptake, not just around banks, but a much wider variety of private sector providers. So I hope one of the takeaways that everyone has here is that we still have a lot of experimenting, a lot of discussion to do, but that we're moving forward collectively with a fair amount of tempo and gusto, and that the people on the stage here are going to be playing a very major role in what money looks like 5 and 10 years from now in the future globally. So please give the entire panel a very warm applause, and then we'll go to the coffee break.
Thank you, Lucas.
Thank you.
Thanks,